Recording in progress.
Okay, good evening, everyone. Okay, so today's topic will be your path to a worry-free retirement starts here. How an annuity plan can guarantee your income, your retirement income. So a simple self-introduction. My name is Ming Liang. I've been in this industry over 9 years now. Okay, and while we wait for others to join, okay, if let's say if you guys are not in the Telegram or WhatsApp channel, you guys can take this time to join. Okay, so the Telegram and WhatsApp channel, right, is a private channel where we update clients, our existing clients with latest finance updates and latest promotions and offerings. Okay, so if let's say you are viewing this from a laptop, you can use your handphone to scan the QR code to join the channel. Telegram or WhatsApp, both are the same, just that it's based on a preference now. But let's say if you're attending this via handphone, okay, you can join via the link that is sent in the chat. Okay, the first link will be Telegram. The second link will be WhatsApp. Okay, so I'll put this here for a few seconds for you guys to join if let's say you guys aren't in the channel yet. Okay, so like for these two channels, basically it's just to share the latest finance updates, breaking news, or any promotions that we have. Okay, so a few more seconds. Okay, so just a disclaimer for today's webinar. All information provided in this webinar is solely for educational purposes. It's not for financial advice. And the statements and views expressed by me in this webinar is on my own personal capacity. And this presentation does not take into account the specific investment objectives, financial situation, or any needs specific needs of a particular person. So if let's say after attending this webinar, okay, if let's say you are interested in anything, do seek advice from a financial advisor, okay, regarding the suitability of the product mentioned, taking into account your specific investment objective, situation, or specific needs before making a commitment to purchase such products. Okay. So today we will cover a few points. Firstly, we will introduce what annuity is, what's the definition of annuity, how does it work, etc. Okay. Then moving forward, we will go into the benefits of annuity plans. Okay. Then what are the questions to ask to choose the right annuity for you. Okay, then any strategies for integrating annuities into your retirement plan, and some real life scenarios or case studies that happen. Okay, so that maybe you can show, as in you guys can take into consideration that may be applied to you. Okay, then moving forward, there'll be any common myths and misconceptions about annuities, okay, that people might have with them. Lastly, we will go on to the Q&A. Okay, if let's say the webinar itself, right, if the stream is choppy or whatnot, do let me know. Okay, volume-wise, this is the loudest. Okay, so probably you can up the volume or use a earpiece so that you can hear better. All right. Okay, so moving forward. Okay, so what's an annuity? So in general sense, it's an insurance contract, okay, that's issued by institutions with the intention of paying out some regular income, okay, to the client itself. Okay, in fact, I would say that every one of us here, I'll say we have an annuity plan, okay, which is our CPF. Okay, so CPF Life is also a annuity plan, okay, from the government. So we contribute as and when we are working, okay. Then at age 65, okay, there will be a monthly payout from the CPF Life account to our bank account for lifetime. Okay, so in fact, everyone has a annuity plan. But however, is CPF Life enough? Okay, how much, let's say with your amount in your CPF Life, right, how much you'll be getting. Okay, we will do some figures itself. So in fact, if let's say a client who is, let's say for example, this year like age 55, he or she has $102,900 in their CPF on their retirement account. Okay, he or she at age 65, you will get roughly about 800 plus, okay, per month for lifetime. If a client has more, okay, double the amount of basic retirement sum, full retirement sum, 205,800, okay, he or she will receive at age 65, roughly about 1,006. Okay, currently now the enhanced retirement sum, right, is 3 times of basic retirement sum, okay, where clients can top up to make it 308,700. Okay, if let's say a client has $308,700 in their CPF life retirement account at age 55, right, okay, you'll be expecting at age 65 roughly about 1,003 per month. Okay, 1,003 per month. That will be given from that you receive from CPF Life. Okay, so in a sense that some clients will ask me, Ming Liang, is this enough? I would say that it really varies from client to client, depending on your lifestyle. Some clients on month to month, okay, probably need more. Okay, so in fact, maybe their CPF won't be enough. But some clients, if let's say they have a huge amount in their CPF, okay, their basic necessities roughly takes about 2K, they'll be able to sustain their lifestyle. But there are some clients also, I understand they do not wish to put so much money in their CPF. Okay. In fact, there are also other ways to get passive income from there. Okay. Okay. So but this year wise, okay, there are some changes to the CPF system. Okay. Next year onwards, there won't be the special account. At the same time, the enhanced retirement sum next year will increase. Okay, will be 4 times of the basic retirement sum. So next year wise, right? This year, enhanced retirement sum is 308, which is 3 times of the basic retirement sum this year. Okay, but next year, right, the enhanced retirement sum, okay, will be 4 times of next year's basic retirement sum, which can go up to 426,000. Okay, if a client has 426,000 at age 55, okay, in their retirement account, okay, he or she will receive at age 65 to lifetime, roughly about 3,003 per month. Okay, but I'll say that every client has different amount in their CPF. How to know how much you'll be getting? Like you can go online to the CPF website, just Google CPF Life Estimator. Okay, if you're age 55 and above, you just key in your amount that you have currently now. Okay, they will help you to tabulate estimated roughly how much you'll be getting on a monthly basis itself. Okay, so today I wouldn't delve so much into the CPF. Okay, in fact, 2 months back, okay, I did a webinar on how to plan for your retirement after the new CPF changes. Okay, where I touched on the background of CPF, the changes to CPF. Mainly, I would say that it's the closure of the SA account, the increase in enhanced retirement sum. How are we affected by it? Okay, what are the 5 major retirees risks? And one more factor that important factor about the CPF life is that at age 65, right, clients have a choice to choose between 3 CPF life plans: basic, standard, escalating. Okay, so but today I'll say that to cover this, it will take quite long. So in fact, if let's say you guys are interested to understand better about the new CPF moving forward, okay, that's going to happen next year, okay, you can drop me a WhatsApp message. In fact, I've done up a private webinar highlights where I address on these issues. Okay, you can drop me a WhatsApp message later separately. Okay, where I can send you some of the highlights itself. Okay, where you can read or view it at your free time. Okay, so moving back to the webinar. Okay, another way to, so in a sense that, like I mentioned, CPF Life. Okay, some clients one thing, they don't want to top up so much CPF Life, or they are already top up to the max, but they want more passive income. One of the ways where we can have another stream of passive income coming in where it gives you guaranteed incomes, such like CPF Life will be a private annuity plan. Okay, but now we will just do a comparison between the two. Okay, so CPF Life, okay, payout will start at 865. Okay, monthly payout. Okay, there's a flexibility on it where you can prolong you don't take out the payout, you can prolong to 70. Okay, where you can get more on a monthly basis if you delay the payout. Okay, payout is lifetime. Okay, whether you can cancel or withdraw CPF Life is really depending on whether you are leaving Singapore or have reduced life expectancy. CPF Life do will address it case by case basis, and they will let you know what are the outcomes itself. Okay, keep your questions coming. Okay, but for the questions, I will address it at the end of the webinar. All right. Okay, flexibility to delay payout. Yes, CPF you can delay to 870. The latest is 870. Okay, private annuity plan. Okay, it's more flexible in a sense that it's more customizable. A private annuity plan, you can have the payout. I would say that if you put in today, 3 years from now, you can receive the payout. Okay, the earliest in the market, 3 years from now. Okay, you can get it from any age. Let's say if you want to have an early retirement, you want to work, you want to have a payout at age 50 or age 55, you can do so. But CPF Life, the limitation is that the payout only start at age 65. Payout duration for private annuity plans is so very flexible. You can have a payout for 5 years, 10 years, 15, 20 years, or a lifetime. Okay, based on your choice itself. Okay, cancellation or withdrawal. Okay, for private annuity plan, some you can cancel or do a partial withdrawal anytime. But there's also a caveat. Some annuity plans in the market, if let's say you terminate earlier, there will be some penalty. But there are some private annuity plans in the market where after a certain period of time, right, if you want to do a partial withdrawal or you want to terminate, you can do so without losing our principal. Okay, it's principal guaranteed itself. Okay, and it's flexibility to delay payout, choose to receive payout, or okay, if let's say for private annuity, your payout starts at age 55. Okay, but then when you receive it, you don't want. Okay, you don't want to receive it. In fact, um, you can still accumulate the payout, okay, with interest any month, okay, or year that you don't need money, where the money will compound in the plan itself. So at the end of the day, you get more when you mature or when you terminate. Okay, so these are the comparison, a few points to compare CPF Life and the private annuity plans in the market. Okay. Okay, so let's address to understand better about the private and retirement annuity plans in the market. So private annuity plans, just like CPF, okay, just that it's not provided by the government, it's provided by private insurers. Okay, in general sense, there are two types of two types of annuity plans in the market. First, there will be life annuity plans. Okay, the payout is for lifetime, which is similar to CPF Life. CPF Life, the payout only starts at 65, but life annuity plan in the market, okay, if you start, the earliest in the market, you can get it on the third year onwards. Okay, so let's say if you start at age 50, your payout can start at age 53, okay, but the payout will be for lifetime. Another annuity plan in the market will be a term annuity, okay. The payout is until a certain age, meaning to say that you can start the payout at age 60. And you can tell the provider to have the payout for 10 or 15 or 20 years. Okay, so these are the two major types of annuity plan in the market. Okay, but just giving you guys an example, for a client who put in 100K for a life annuity, okay, at age 50, he or she decide to have the payout at age 55 for lifetime. Another client, 100K into a term annuity at age 50, payout at age 55 for 10 years. The amount that the client who is selecting the term annuity plan, okay, at age 55 to receive to age 65, the monthly payout will be more compared to a life annuity, because life annuity, the payout is for lifetime. So the payout will be spreaded. Okay. So in a sense that if let's say clients want more substantial payout, okay, for their golden years, let's say golden years 60 to 70, okay, I would say that one plan that they will be more suitable for them will be a term annuity, because they can get more. But for a client who probably has sufficient and want some more okay, they can choose to have the life annuity, okay, where they can give you the boost in income, okay, but not as substantial as term. But life annuity, the good thing about it is that once the payout starts, okay, there are plans in the market that is capital guaranteed already. So in the sense that it gives you the boost of income, but in the sense that if you need money, you can withdraw partially or terminate anytime with the principal impact, okay. So why private annuity plan? Okay, so it is possible to get retirement finances sorted out via a private insurer, especially for those that are self-employed. Okay, so self-employed clients probably do not have so much in their CPF. Okay, so in the sense that uh, it will be suitable for clients who to do a private annuity if let's say they don't have CPF, or let's say they have maxed out their CPF, they want more from one passive income, or let's say a client who has CPF but does not want to top up to the enhanced retirement sum, okay, they want to seek other alternatives, okay, they can consider a private annuity, okay, which can supplement your CPF life, okay. Keep your questions coming in, okay, but I will address the questions at the end of the webinar, okay. So giving an example for life annuity, so life annuity. Okay, so you can do a single or regular premium. Okay, single premium means to say that you put in a lump sum. Okay, regular premium means to say you pay across a few years. Okay, for life annuity, there are some in the market that you just need only pay for 3 years. Okay, you can pay single 3 years, 5 years, 10 years, based on your comfort level. It's quite customizable. Okay, then there will be a accumulation period. Okay, shortest I would say that you need to acclaim for 3 years. The earliest payout will be on the third year onwards. Okay, so for example, if a client age 50, okay, put a single or regular premium, earliest he or she can get the payout is at age 53. Okay, but if let's say if age 53 you feel that you are still working, in fact you can delay the payout. Let's say if you want to retire at age 60, you can set the payout to start at age 60. Okay, then the payout will start at 60 and you get a lifetime income on a yearly basis. Okay. Okay. So until let's say the client passes away, the principal plus the compounded interest will be paid to the next of kin. Okay. Or if let's say the client when leaving feels that he or she needs the money partially or fully, you can withdraw partially or fully itself. Okay. Yeah. So for term annuity, okay, also the same, okay, you can do a lump sum or you can pay across, let's say 5, 10 years, okay. There will be accumulation period for term annuity, right? The accumulation period compared to a life annuity in the market currently now, right? I would say that the accumulation period needs to be at least 5 years. So in the sense that if you put in a single premium 50 at age 50 years old, your payout only start at age 55. Okay, so for term annuity, the shortest waiting period will be 5 years for clients to receive a payout. Okay, so you can decide when you wish to receive a payout, but you have to wait at least 5 years. Okay, then you can have a payout for let's say 5, 10, 15, 20 years until the policy I would say terminates. Okay, when it ends. Okay. So these are a few of the benefits of an annuity plan. Okay, it provides guaranteed income stream. Okay, there's no market volatility. It gives clients the peace of mind. Okay, just like CPF Life that at the end of the day, okay, there will be a guaranteed income stream coming in, complementing your CPF Life. Second, it protects us against longevity risk. Because one thing we don't know, okay, we don't know when we will pass away. So CPF Life is good in a sense that it gives us a life income, okay. But let's say if you want more, okay, annuity plan can supplement it, okay, by giving you more and giving you a peace of mind as long as you live, okay, or during your golden ages, okay, you will be receiving substantial monthly income, okay. There will be also flexibility in payout options like uh, uh, instead of CPF Life is lifetime payout, okay. Annuity plans in private annuity plans in the market, you have the flexibility of getting it in let's say 5 years, 10 years, 15 years, 20 years, or even lifetime payout, okay. For let's say a 10-year payout, okay, of course you will receive more on a monthly basis compared to a lifetime payout. If let's say you put in the same amount of money, Okay, so in the sense that it gives clients the flexibility. Okay, it also gives you diversification of retirement income, meaning to say another income stream coming in. Okay, uh, probably clients have CPF life, okay, pensions, or let's say your rental income or from your investments. Okay, but however, some clients have quite a substantial amount in risk assets. They want to diversify their risk to go into assets that doesn't have any risk. Okay, they can also consider a private annuity plan. Okay, to complement their passive income. Death benefits lah. Okay, death benefits in the market, I would say that not quite substantial. Usually in the market, death benefits is roughly 105%, 5% death benefit. Okay, itself. Lastly, is like I mentioned previously, very customizable, very flexible. You can choose your payout. Okay, you can choose how long you want to pay. Single premium, 5 years, 10 years, 3 years. Okay, customizable. When you want to receive it and for how long. Okay, 5, 10, 15, 20. Yeah, so it's really, you can it can really we can really find a product, okay, in the market that suits your criteria itself. Okay. Okay, then this will be some of the questions you might want to ask, okay, when you're shopping for retirement insurance, okay. So how much payout you need, okay. So in a sense that it varies from client to client. Some clients probably need on a monthly basis 2K, 3K, 4K, 5K. Okay, CPF life probably isn't enough. Okay, so clients need other sources of passive income. Okay, for retirement insurance, what are the guaranteed and non-guaranteed income components? Note that the higher the guaranteed amount, the more sustainable the income payouts. So for private insurance annuity plan, right, there will be always the guaranteed and non-guaranteed income. Okay, guaranteed income is from day one, they'll guarantee you this for the whole contract. Non-guaranteed income is the bonuses that will pay out, but bonuses will only pay out on year to year. Once they pay out, then it's guaranteed. Okay. And another question that you might ask is that you want to ask yourself when you're shopping for retirement annuity will be when you want to start the payout. Okay, you want to start the payout at when you retire. So also the next question will be to ask yourself when you will retire. So because let's say when we are working, okay, we have a source of income coming in, so probably we don't need the passive income stream. So if let's say when we retire, okay, so there won't be the main source of income stream coming in. So we need passive income streams. And how this payout, right, how many years you want it to be or for lifetime? Okay, you want the fixed or variable payouts. Is there any additional bonus during or at the end of the policy term? Okay, then the premium payment, is it for a limited payout or a single premium? Okay, and down the road, let's say if I want to change the income payout period, is there a flexibility if I want to change? Okay, so for this, right, there are companies in the market, okay, that allow client to change, okay, their payout period before they start receiving a payout. Okay, once you start receiving a payout, you cannot change it. Before you receive the payout, you can change. Okay. Any questions, do drop into the chat box or Q&A. Okay, we will address it at the end of the webinar. Okay, is there protection cover? Okay, and what is the payout upon death? So these are some questions, important questions. Okay, that I will address with my clients before I do a recommendation for them to find the most suitable product. Okay, in the market for them. Okay. Oh, another good thing about uh, this is that I can distribute all the insurance company in Singapore, except for Great Eastern and Prudential. Okay, just ignore this Great Eastern logo. All the insurance company in Singapore I can distribute. So in a sense that providing clients with a wider range, okay, to really find the most suitable product for client. Okay. Yeah. So all in all, okay, CPF is our foundation, okay, of a passive income stream for retirement. How can we complement it? Okay, for clients who are self-employed, who doesn't have much in their CPF, okay, they can consider doing a private annuity. Second, for clients who have money in their CPF, but they feel not enough, but they also don't want to top up to the enhanced. They don't want to lock up so much money in their CPF. Okay, they also can consider a private annuity plan, which can give them the flexibility. Third groups of clients who have maxed out their CPF life, but they wish to have more. Okay. income streams coming in. Okay, they also can have a private annuity plan to complement their CPF life. Okay, so a private annuity plan, okay, gives clients another stream of income coming in. Okay, I'll say that for a client, if let's say you only have one stream of income coming in, compared to a client who has multiple streams of income, let's say five streams of income, which client do you think will be more have a better retirement, a more peace of mind, a mindset during their retirement? I would say that if let's say I have five streams of income, at the end of the day, if one dries up, at least I got four more streams. So at the end of the day is to build multiple streams of income, okay, for clients. And a private annuity plan, okay, gives clients a guaranteed income stream coming in, okay. So moving on to some case studies, okay. Guaranteed income, okay, for retirement. So for example, okay, John and Mary, both 65, retiring, and they want a reliable guaranteed income source coming in as long as they live, okay. They already have CPF life, and they have been saving diligently over the years, but are concerned about the market volatility, okay. They don't want so much risk of the investment risk, okay. So what they did was they purchased a life annuity, okay, with a portion of their retirement savings. They chose a joint and survivor annuity, which means the payout will continue as long as either of them is alive. Okay, this provides them with a monthly income, okay, for life regardless of market conditions, and they feel more secure, knowing that their expenses, okay, are covered by the annuity plans on top of their CPF life, allowing them to enjoy retirement without worrying of market fluctuations. Okay, so this is one of the case studies for clients who wants guaranteed income streams, who don't want to be concerned about the market volatility. Okay, another case study that we have is that protection against longevity risk. Just now, I also briefly mentioned about uh, one thing we really don't know. We really don't know when we will pass away. Okay, so the scenario is that Sarah, okay, age 55, is worried about outliving her retirement savings. So she has saved up some amount, but she wants to ensure that the money won't run dry if she lives longer than expected. So Sarah decides to purchase a longevity annuity, mean to say a life annuity. Okay, so she pay a lump sum, okay, and she receive payout, okay, for lifetime, okay. So in these two scenarios, annuities provide retirees with a financial safety net, okay, by giving them guaranteed income and protecting against longevity risk. And this really shows how annuity can really uh, uh, tailor to meet different retirement needs, okay, and preferences, providing really the stability and peace of mind during the retirement years. Okay, so one more scenario I always share with clients that let's say scenario A, you have all the money in the bank, okay, but you have already retired, no source of income coming in already. Okay, if you see when one day you walk down you're in this shopping mall, you see something that you like, this thing probably costs, let's say, 2K. Okay, so in the sense that you have all the money in the bank, uh, you have stopped working, no income streams coming in, or scenario B, you still have money in the bank, but not as much as scenario A. Okay, but you have passive income coming in. Okay, every month you have 5K. Okay, you see the same thing which costs 2K. In which scenario will you make a snap call? More likely to make a snap call to buy the item which you really like at 2K. Okay, probably I'll say that it's scenario B. Okay, why? Because you know that regardless of what happens, okay, every month there's 5K coming in. But for scenario A, no income coming in. Okay, if let's say I spend this 2K, is it enough for myself in future? There might not be, because we don't know when we will pass away. Okay, so by creating another stream of income coming in, it gives customers a peace of mind. Okay, and also I'll say that a happier retirement, where whatever you want to do, you can do without the financial burden itself. Okay. Okay, so some lessons learned for retirement planning. I always tell clients to start early. Why? Because when you start early, okay, there's this power of compounding interest. Okay, so when you start early, I would say that some products, I'll say that if you don't start early, you won't ever start. Just like a private annuity plan. Why? Because just now I mentioned for life annuity, if you put in a lump sum, the earliest you can pay out is third year. Okay, so you need some waiting period lah. Okay, for term annuity, okay, the waiting period, if you put in a lump sum, okay, the monthly payout only come in on the fifth year. Okay, so it really takes some time. Okay, comparing, let's say if you are age 50 or age 70, at which age, if let's say you are doing a private annuity plan, at which age will you be more inclined to do? Probably the earlier, because at age 70, when you receive the payout at 70 or 75, it might not make much sense to you because one thing on our mind is that we want to enjoy now, okay? And we might not live to that age, okay? By age 50, at least there's the certainty that at least, we're going to live till at least 70 or 80 years old. Okay. Another lesson learned will be diversification now, is to help clients to diversify, to hedge away the investment risk against downturns itself. Okay. One more thing is to also to do regular review and adjustments. Okay, because I'll say that financial situations change. Okay, our lifestyle might change over time. Okay, we need more. Okay, for our daily expenses. Okay, where we need to review to see how much we need, okay, and how can we cater that to your retirement. Okay, risk tolerance at the same time is really quite important to understand your risk tolerance. But I would say that risk tolerance, I would say that it changes across time. Okay, size has shown as we age, the risk that we take will be lesser. If we have more commitments, probably we also take lesser risk. If someone who doesn't have any dependent, who is single, I would say that he can take a lot of risk because at the end of the day, no one is relying on him or her. Okay, so probably someone who of that nature is more has a bigger risk appetite. But for a client who has a family, 3 kids, okay, can't really take much risk. Want to change out also will have to think twice. Okay, so itself. Okay. Lastly, will be longevity risk. Okay, so the thing is that we don't know how long we will live. Okay, so in the sense that CPF life and a private annuity plan gives us the peace of mind. As let's say if we have planned that, okay, at least at the end of the day, when we retire, there's some funds coming in. Okay. Yeah. So there are also two misconceptions. Okay. Two myths about annuity plans in the market. Okay. The first myth will be annuities are not a good investment. Okay. But in reality, I would say that annuities, okay, can be also are beneficial to clients, okay, who are seeking guaranteed income in the form for their retirement, okay, where they give them a financial safety net and same time the predictability. Of course, annuity plans, the rate of return, okay, cannot compare to, let's say, stocks, okay, because high risk, high return, low risk, low return, okay. But in itself, that it gives you a peace of mind knowing that on a monthly basis there is guaranteed income coming in. Okay. Secondly, is that annuity plans are illiquid. Okay, they die our money. Okay, so just now I also mentioned, okay, for life annuity plans in the market, okay, okay, when you receive the yearly payout, okay, after a certain period where they pay out, when you receive the payout, actually is capital guaranteed. Okay, you can withdraw partially or fully. But however, for term annuities that gives you a payout for 10 or 15 years, those plans, frankly speaking, if let's say you terminate earlier, there will be a penalty. So at the end of the day, I always encourage clients whenever you go into an annuity plan, okay, put a comfortable amount that you know that you will be setting aside, that you won't be touching. Okay. For life annuity, at least you still can partially withdraw, okay, or take it back your principal. But for term annuity, okay, always encourage customers to put a comfortable amount they are setting aside for your retirement itself. So you won't be touching it, but when the payout period starts, you receive a monthly payout itself. Okay, so I hope that by addressing all this, okay, you have a clearer understanding on how annuity works and whether they are aligned to your financial goals and retirement planning. Okay, then So example for term annuity lah. So Rebecca, age 45, she desires guaranteed income of 1,000 per month. Okay, she decide to have a premium payment term of 10 years. Okay, she wants to receive it at age 65 for 20 years. Okay, so based on these few parameters lah. Okay, her annual premium is roughly about 20K for 10 years. She put in roughly about 200,000, okay, at age 65. For the guaranteed and non-guaranteed portion, she will be getting 2K per month for 20 years. So 2K per month for 20 years, she will get back 482,000. She put in about 200K, she get back 482,000. So she roughly 2.5 times of her money, okay? Another example, giving you guys another example. Mr. Tan, okay, age 30 lah, okay. He wants to receive $1,000 for 20 years when he retires at age 55. He will have to pay 17K for next 10 years. So total he put in, he saved 170,000, okay, at age 55 to 75, okay. He will receive guaranteed plus non-guaranteed 2004. Okay, so Mr. Tan put in 174,000. Okay, but at the end of the day, he received back 578,000. Okay, which is I would say that three times of his about two or three times of his money itself, giving himself a peace of mind knowing that when we retire, there's some money. Okay. So as also we also must question why we work. Okay. Actually, our ultimate aim when we work, okay, is really to sustain our lifestyle and to provide us with sufficient amount when we stop working. Okay. So is to begin the end in mind. Okay. So when we work, put some of our savings into a retirement annuity plan. Okay. Well, this annuity plan, when we retire, will give us a payout itself. Okay. Another example for life annuity plan now. So life annuity plan, okay, is payout for lifetime. So Patrick, age 40, okay, he wants to have another source of income for family expenses and whatnot. Okay, he pays a yearly premium of 14K for 5 years. So total he pays about 72K. Okay, he chose a 0 year for his accumulation period. So he pay for 5 years. On the 6th year, he will start receiving a payout. So payout, okay, will be roughly about 2K. Okay. So you'll receive a lifetime payout. There'll also be an annual booster coming in after a certain period in time where he'll receive more. So at Patrick, at age 99, he choose to withdraw everything. Okay, the 72K, he withdraw 90K. Okay, at the same time, factoring his yearly income, okay, he will have received about 121,000. Okay, but any point in time after age 45, if you want to partially withdraw or terminate, okay, to take out the full principal, he can do so. But if he doesn't need the money, every year he will receive the payout. Okay, so hope these three illustrations gives you guys a clearer picture on how term or life annuity works. Okay. Oh, by the way, we received a few days ago. We received news that we are doing a 6% guaranteed returns promotion for this month. Where clients who sign up a retirement annuity plan with us can enjoy 6% guaranteed returns on your cash for 3 months. So how do you be eligible for this promo is to purchase a qualifying life insurance policy with us where you can enjoy the 6% guaranteed returns. So the 6%, clients will ask, how much can I put in for this 6% if let's say I purchase a retirement plan with us. You can put 50K fresh funds with us for 3 months at 6%, which at the end of the 3 months, you will gain about $739, 6% for 3 months, but this 50K is you don't have to lock up with us, you can, if let's say in the need, you can withdraw anytime, it's not lock up, but to maximize the promotion, I will encourage customers to put in 50K, for 3 months, where you, at the end of the promotion period, you can withdraw anytime, you will receive additional $739, So, what are the qualifying eligible plans, single premium for retirement is just 30K, regular premium is annual, is only 6K, and the application needs to be submitted by month end itself. So another thing to note is that the payout that you receive for term or life annuity plan really depends on different factors. The first factor will be how much you'll be putting in. Okay, and when you decide to get a payout and for how long the payout, okay, that will determine how much you'll be getting on a monthly basis or yearly basis of your term and life annuity. Okay, so currently now we have this 6%. Okay, so in a sense that if let's say after hearing this webinar, you are interested to find out more about our annuity plans, okay, where I can distribute all the insurance company in Singapore except for Great Eastern and Prudential. Okay, you can drop me a WhatsApp message. Okay, then we can have a further discussion on this. Okay, so currently now we'll go to the Q&A sessions. Okay, if you have any questions, just drop them in the Q&A or the chat box. Okay, let me just okay. For this retirement scheme upon death, any amount left for beneficiary. Okay, so for life annuity, okay, if let's say if someone passes away, okay, the policyholder passes away, the client will get back the principal plus the accumulated interest, okay, or 105%, okay, death benefit, okay. For term annuity, it's also the same, 105%, okay. Okay, second question, if you have the amount, say 426K, will there be any attraction in payout amount if a private annuity? For this client, are you referring to CPF Life? If let's say you have 400K in CPF Life, okay, will there be any attraction in payout amount if subtraction amount? Okay, it's a separate thing. So CPF Life is CPF Life. Okay, private annuity payout is private annuity payout. They won't affect each other. Okay, is to the private annuity plan is to complement to supplement your CPF Life. Okay. For case 2, she must start paying the premium so early. Case 2, the case study 2. Case study 2, case study 2, age 55. It's really depending. You can start as early as age, I would say 20 years old, you can start a retirement plan. Okay. The earlier you start, the better it is. It's just like growing a tree. Okay. The earlier you grow a tree, the tree gets bigger. So in a sense that, let's say, if client currently now is 60 years old, if let's say you're going for a term annuity, okay, you can do a single premium, the earliest payout will be at age 65. So you can start anytime, okay, but earlier the better. Okay. What is the minimum premium requirement for an annuity? It really depends. Okay, it's based on your comfort level. If you put more, okay, on a monthly, if you put more in the annuity plan, you get more. If you put lesser, you get lesser. Okay. For this kind, probably you can drop me a text. We can have this further discussion afterwards. Okay. Next question, for life annuity, can I confirm that there can be partial withdrawal of money? Yes. Okay. So life annuity in the markets. Okay. I've known some in the market that when client receive the payout, the earliest the payout can be on the 3rd year. Okay. Once you receive the payout, the plan is capital guaranteed. You can withdraw partially or fully. But if you withdraw partially, okay, you still have money in the plan. The yearly payout subsequent years will be lesser. Okay, it's prorated. Okay, and you can terminate anytime you want. Okay, so yes, okay, you can withdraw partially or fully after the payout period and it's capital guaranteed. Okay. Hope I address your questions. Okay. If you have any more questions, do just drop them in the chat box. Okay. The next question: if I have funds in CPF in excess of minimum sum, can I withdraw these excess funds? Presuming I only want to go for, yeah, you can, but you must pledge your property. Okay. You can pledge your property. Okay. Then you can withdraw the excess funds. You just put your basic retirement sum. Okay. You can do so. Okay. Can I confirm that for life annuity, I can withdraw partially? Should I need the money? Yes, I've addressed the question. Okay. Okay. Yeah. So, for example, Patrick, for the life annuity, the payout is just only 2K per year. Yes. Okay. Because for life annuity, the thing is that it doesn't touch your principal. They only give you the interest on a yearly basis. Okay, so every year what they grow, okay, they give you back. They don't touch the principal. That's why I'll say that compared to a term annuity, the payout I'll say that will be lesser. But a life annuity will be for clients who I'll say that have sufficient for their monthly expenses, just that they want their boost in their passive income stream. At the same time, they want the flexibility to withdraw partially or fully anytime they want. Okay, so life annuity will be for clients of this profile. But for a client who want more substantial payout, okay, I'll actually recommend clients for term annuity, where the payout for clients will be more substantial itself. Okay, next question. Annuity or retirement insurance, which is better or has a higher return? Annuity or retirement insurance, I'll say that retirement insurance company, they have retirement annuity plan. Actually, both, okay, annuity or retirement insurance is the same thing. Okay, same thing. Okay. Next question. Possible to opt for no amount for beneficiary to maximize monthly payout. Are you referring to CPF Life? CPF Life, okay, so CPF Life, there's three plans that you can go. Okay, basic, standard, escalating. Which I addressed in my previous webinar. If let's say if you want to have the summary, the private summary, okay, highlights of it, okay, do drop me a message, okay, later, okay, I'll flash my number later. I'll send it to you where you can have a deeper understanding about it. But based on my understanding, no, okay, there will be still some money left for your beneficiary. Okay. Yeah. So yeah. Okay. Let me just go back to the next few slides. Okay. Okay, so here is my number. Okay, so for any client after hearing this webinar, you have any queries, or you are interested in the 6% promotion or whatnot, okay, do drop me a message. Okay, my handphone number. Okay, just go on. Okay, my handphone number is 9184272, or you can scan the QR code. If you are viewing it from a laptop, you can scan using your handphone, or you can just click on the chat link. Okay, this link will go bring you directly to my WhatsApp, okay, landing my chat box. Okay. Lastly, okay, for clients who have joined later, okay, if let's say you have not joined the Telegram or WhatsApp channel, okay, where we provide the latest updates and latest breaking news or offerings, you can join by scanning a QR code or by clicking the link that I'm sending in the chat box now. Okay. Okay, so last question. CPF pays 4%. What about life and term annuity? What is the interest? Okay, just to be upfront, I'll say that the best annuity plan in the market will be a CPF Life. Okay, in the market for term annuity or life annuity, I'll say that in ranges. Okay, roughly, I'll say that the safe average will be roughly 3 plus to 4. Okay, so just to be upfront, best annuity plan in the market will be CPF Life, but CPF Life, like I mentioned, there are also caveats. Okay, it's a lifetime payout, but some clients don't want to lock up so much money in their CPF. Okay, they want to receive more for the same amount that they have for a shorter period of time, where you can consider private annuity plans. Okay, so if you have any questions, do drop me a WhatsApp message after this. Okay, I'll see how I can help. Okay, then lastly, if let's say this webinar adds value to you, you can join the Telegram or WhatsApp channel, which I've flashed on the screen, or click on the link. Okay, any questions, just drop me a WhatsApp message. Okay, I can see how I can help. Okay, then if let's say there's nothing else, okay, I've come to the end of the webinar. Okay, so hope I've added value to you guys. Okay, have a good night. All right, take care, and hope to hear from you soon. All right, bye bye.
Recording stopped.